Hello and welcome to today's update. Today is 12th of November. You're looking at a chart of S&P 500. S&P 500 had a big week. It was up 6%, almost 6% this week, and most of the gains came after the CPI report on Thursday. If we look at the daily chart, following the FOMC meeting where Fed Powell said interest rates are going up, there's more tightening coming. The market was on a decline right here. But that narrative changed after the CPI report. So we go from interest rate are going up narrative to inflation is falling. And so we see a massive reversal on Thursday, and it continued on Friday. So just on Thursday alone, S&P 500 was up over 5.5%, this big green candle. So what happened in the process is that S&P 500 was trading in this zone between 3,500 and 3,900. It managed to push past 3,900 and it stayed above 3,900, closed just below 4,000. So that's positive because it managed to break out of this range to the upside and not to the downside, as many were thinking that would be the case. What we also see on a daily basis is that you see MACD has now crossed and moved above the zero line, so that's positive. And you see RSI is above the 50 level, so these are both positive development, which shows that momentum indicators are now in positive, which would support additional gain, because you can see right here when MACD crossed above the zero line and RSI was above the 50. So this gray line right here is the RSI 50 level. When RSI stayed above 50 right in this zone and MACD was above, crossed and moved above the zero line, good things happen to price. So something like this could happen. Given the technical picture, it looks like there could be a little bit more to the upside. What are the upside possibilities? So if I bring in the moving averages, 200-day moving average is right here, which is around 4,081. And then you've got this level right here, which is around 41.14. So this zone right here, I think between 4,080 and 41.15, I think would be an area of challenge. So on a short-term basis, I do expect to move up to this level and challenge those area. Whether or not we break through those level is a separate story, but at least it looks like this counter trend rally could continue for a little bit longer. That's because between now and early November, there aren't any major economic report that can change the current narrative, which is inflation falling. So as long as this narrative stays in the market, I think the market can gradually move higher. This counter trend rally can move higher. And then when we get the next set of reports in early November, the labor, the jobs report, and then the next month CPI report, that's when we'll see whether or not the narrative changes or not. But at least over the next 2.5 to 3 weeks, I think the narrative in the market is going to be inflation is falling, and that could support higher prices. I mean, I'm not expecting market to go straight up. It will go up, pull back, go up, pull back, do something like this until we get to the next set of reports. If we look at the weekly chart quite quickly, you can see that this week's weekly candle is bullish. It had completely closed above the previous 2 weeks candle. That's quite positive. You can see weekly RSI MACD is just crossed, but remains below the zero line. RSI has gone above the 50 level. Now this RSI 50 level and MACD zero line is very, very important, because if you look at right here, so when we came out of the COVID, this is when RSI crossed above the 50 level right here. And that's the same time when MACD had just made a cross. Then RSI stayed above the 50 level until here. And MACD crossed above the zero line right here and stayed above the zero line until here. And during this time, good things happen to price. So when RSI is above 50 and MACD is above the zero line, positive thing. You can expect sustained rally. At the moment, we have neither. RSI just gone above the 50 level, but MACD remains below the zero line. So until MACD is able to cross above the zero line, this could easily fail, because right here you can see RSI had gone above the 50 level, but then wasn't able to hold on to it. Here we see RSI was above the 50 level, but fell back only because MACD was below the zero line. So that's why it's very important that MACD goes above the zero line. So we'll see. Usually MACD takes few weeks after RSI goes above the 50 level. Usually MACD crosses above the zero line a few weeks later. So we'll see whether or not that happens, but at least price action is positive. We talked about the resistance, so right here around between 41-15 is where there's going to be resistance. You can see lots of weekly candles that are interacting with this 41-15 zone, so that would be an area of resistance. So we'll see how S&P 500 deals with it. If we look at Nasdaq next, so we'll start with the daily. So again, Nasdaq was trading in this zone for many weeks and then managed to break through this level. It formed a double bottom here, but it was quite touch and go, because after the FOMC meeting it came all the way down to this level, and then there was this suggestion that this level would break and then we're going to have a waterfall moment if the CPI came in hotter than expected, but that didn't happen. Market reversed, and then Nasdaq managed to break out of this range. So what we want to see is whether or not there is price acceptance above this level. So we need to see Nasdaq stay above this level. If it pulls back inside this range again, so this would be a fail breakout. But momentum indicators are suggesting that we might have a little bit more to the upside. RSI is now above the 50 level. MACD, although below the zero level, but it has crossed. It's now heading towards the zero level. If it's able to go above the zero level, that would be positive, because last time when MACD crossed above the zero level and RSI was above 50 level, we saw some sustained rebound in Nasdaq. So we'll see how things play out. If I look at the weekly chart, the weekly candle this week is looking quite positive. MACD is well below the zero level. RSI hasn't gone above the 50 level. So there's more work to be done on S&P 500. But on a daily basis, it is looking constructive. Now, I want to bring Dow. This is Dow weekly. Now, look at this. Since reaching a low of around 28,500 at the end of September, it's been on a tear. And you can see that it has managed to close above this bear market downtrend. On Friday, this is a strong looking candle. You can see that the candle doesn't have any wick on the top. So this is a bullish looking candle. We need to see whether or not it can stay above this. We need confirmation. We need to follow up. So we need to see that it stays above this breakout level. You can see RSI has been moving higher. It has gone above 50 and stayed above 50 for a couple of weeks now. MACD, you can see, has crossed and is now heading towards the zero line. If it's able to go above the zero line and RSI remains above 50, there might be something more to this rally. We can't say that this is a counter trend rally anymore. Because I can see that the momentum indicators are improving. You can see when RSI on a weekly basis stayed above 50 level, right here from this point all the way up to here, and then MACD stayed above the zero level from here all the way. Good things happen to price. So RSI is now above 50. It went above 50 right here. MACD hasn't yet. So we need confirmation. We need both of these things to happen. So right now we have one. So which means that I'm still, a little bit cautious. I am seeing positive things, but I must say that I'm still cautious. Until I see MACD go above zero line, I will hold, I will basically not say that this is the this is the bottom, but at least Dow is looking better among the four major averages. Is looking much better. If I look at Russell 2000, so this is Russell. So it's now come up to this bear market downtrend. Um, RSI I see has gone above the 50 level, but MACD is below the zero line, but it has crossed here and it's now heading towards. So I think over the next few weeks we'll see whether or not the MACD can go above the zero level and RSI can hold on to can stay above 50. You can see previously RSI did go above 50, but it wasn't able to hold on to it because MACD was below the zero level. When MACD remains below the zero level, momentum is not strong enough. So we could have a fail attempt also. So I think, but it's encouraging. It's encouraging that we have a cross here, but we need confirmation. We need MACD to go above this. Then that's when I will have more conviction that this rally probably has a little bit more legs. But until that time, let's just treat it as a counter trend rally, but very encouraging. So if we look at some of the sectors quickly, just to see what's going on, XLK, the largest sector. So this is, if you look at the daily basis, you can see that it was trading within this range, managed to break through this range. So right here. So you can see that it managed to break through this level. So this is quite positive. Next area of resistance is around right here, around 139, 140. You can see on a daily basis MACD is crossing and it's about to go above the zero line. That's quite positive. You can see RSI is well above the 50 level. So this is looking quite positive, and if we see further gain in XLK, that's going to provide a boost to S&P 500 because technology is almost 30% of S&P 500. XLY, it was looking quite bearish on Wednesday, but then completely reversed and it's looking much better. Well, it needs to come up to this level just to overcome, if it's able to get through this level, it then overcomes all of these, price action right here. So there's still work to be done, but it's improving. I can see that RSI has gone above the 50 level, but MACD is still below the zero level. So there's some work to be done. This is a big sector. This is a growth sector. So we need to see XLY, move higher and take out some of this resistance right here. XLF, another big sector, financial. You can see that it's been trading in this zone for many weeks. You can see it better on a weekly chart. You can see double bottom formation, but this is an important level. If it can break through this level and stay above this level, this double bottom will be completed. You can see that momentum indicators are improving. RSI now above 50 and holding. MACD crossed, moving higher, heading towards zero line. So that's looking good. If this continues to perform well, that's good for S&P 500. This has a big weight in S&P 500. Next up, XLV. Again, you can see trading in this range for many weeks. Double bottom at the top of this range. So if it moves, breaks above this level, positive for S&P 500. You can see it's gone above the RSI 50 level. MACD is crossed, heading towards the zero line. So if it's able to get through and move higher, positive for S&P 500. XLC communication, one of the weakest sector, massive decline. Still needs to, it had a good week. You've got Meta, you've got Google, you've got Disney. All of them have been a drag on this in this sector. But I want to see it go above this level, 52, so which is the high of this candle. So there's still a lot of work that needs to be done. You can see it's not, RSI is nowhere near 50 level, MACD is well below, the zero line. So there's still a lot of work that needs to be done. On a daily basis, you can see that it started to improve. You can see that on a daily basis, RSI has gone above 50. MACD well below the zero line, but it's crossed. So we're seeing signs of improvement on a daily basis. Obviously that will translate into weekly basis as we see more price action. Materials, one of the stronger group over the last several weeks. It's now come up to this the previous swing high. So if it's able to get through this level, which is around 81, 86, that would be really, really positive. You can see that RSI has been moving higher. You can see that MACD crossed. It's heading towards the zero line. This is not a big sector, but it is adding to S&P 500. It's putting upward pressure on S&P 500. So this is a defensive sector. We want to see growth doing better than defensive. Industrials, one of the strongest sectors in recent weeks, coming up to the previous swing high. Momentum indicators are improving. This is looking better. XLU, big drop. If you look at daily basis, it's looking a little bit better. Big drop, now started to move higher highs. You can see on a daily basis, momentum indicators are moving higher. So this is, constructive, positive. On a weekly basis, we don't see the, patterns here, but still you can see higher highs. XLP, defensive sector, not bad, moving higher. Momentum indicators are also moving higher, so that's not bad. XLE, one of the stronger sector, but lightweight. It's now coming up to the top of this weekly high, so this would be an area of resistance. It had a massive run up. MACD is going higher, but MACD remains well below the previous high, so you might say this is a negative divergence. You can see RSI is not nowhere near the previous high. You might say this RSI is beginning to look weak. So I'll keep watching, to see how things develop, whether this acts as a temporary resistance, but overall looking quite bullish. Real estate sector, again, since reaching the bottom, I can see higher highs on the weekly, looking better, improving. Now let's look at why all these things happening. Let's look at the bond market to see what's happening in the bond market. So we'll go to the daily. So this is the Fed funds future. Now after the FOMC meeting, once Fed chairman said, hey, interest rate is going up, interest rate going up, the market was expecting Federal Reserve to increase interest rates above 5%. You can see the Fed funds traded, this April contract traded as high as 5.15. But after the CPI, that expectation is changing in the market. Market is now basically saying that the Fed doesn't have to go up to 5%. Fed can stop somewhere between 4.75 and 5. Because you can see that the April contract closed at 4.85. The June contract, this is the June contract, it closed at 4.89. This is the September contract, it closed at 4.78. So I'm seeing, the futures contracts have come down below 5%. They were all trading above 5% after the hawkish Fed Powell comment. But after the CPI report, you can see that expectation is changing. So market is basically expecting Federal Reserve to stop somewhere between 4.75 and 5. Now we are already at 4%. In December, Federal Reserve is expected to increase by 50 basis points. So that takes Fed funds to 4.5. So if the Fed stops at 5, that means there will be another 50 basis points left, after December. So maybe they do a 25 in January, another 25 in February, and then stop. And by that time, Fed funds rate would be at 5%. Or they do 25 basis point after September. After December. So the expectations are coming down. I think in November, when we get the new set of economic reports, the jobs report and the CPI, that would provide additional data to determine whether or not what happens to rates. But at the moment, rates are coming down. If you look at the 10-year closed at 3.85, big drop right here. It was it traded as high as this one was I think 4.35, and then it's been coming down. You can see the MACD's been falling. So there is support around right here around 3.5. So maybe it pulls back between 3.5 to 3.6 over the next few weeks. but it's looking like it's coming down. 2-year also is pulling back. It's still above the previous low right here. So question is whether it can pull back to 4%. So this level is 4%. So this level is 425. So 425 looks doable. Not sure whether it's going to fall all the way to 4%. But market's expectation is definitely changing, and that's helping stocks. And with yields coming down, what's happening to dollar? It's getting crushed. Big drop in dollar. I mean, you can see momentum indicators. I mean, it was quite noticeable on a weekly chart, because you can see that on a weekly chart the momentum indicators were also weakening. You can see RSI had made a lower high right here, and the price made double top. If I show you the line chart, you can see it made a double top right here. So double top in price and lower high in RSI is an indication that momentum is weakening. Also, if you look at this, this is 61.8. You can see right here when it came to RSI came to this level, bounced, price went up, pull back RSI again to 61.8. We see a bounce, and then this time we see a lower high, and this time it came to 61.8, but 61.8 didn't act as a support as it did here and here, and then boom, it fell. Now it closed below 50. Now I do expect some kind of a bounce. Remember, when dollar DXY RSI remained above the 50 level and MACD remained above the zero line, prices were going up higher. Now RSI has gone below 50. Now I don't know whether it's gonna stay below 50. It can bounce and get back above 50. But if it stays below 50, like look at what happened here. So once it fell below the 50 and it stayed below the 50, you can see that there was a decline in price. And at the same time, you can see RSI also fell below the zero line. So when these two things happen, then price basically loses momentum. You can see RSI is way higher, way above the zero line. So I do expect MACD to come towards the zero line. But I can see that RSI has fallen below. But I do expect a bounce, because this is a sharp decline. I don't think it's just going to fall in a straight line. It'll try to rebound, and then fail, because the momentum indicators are now weakening. So I do expect some kind of a bounce. If you look at the daily chart, you can see that it's quite stretched. You can see that RSI is in oversold territory. Stochastic is also getting oversold. So I would expect some kind of a bounce. So there is support around right here, 104. So I would expect some kind of a bounce, because this is a big drop. If we look at the VIX, so VIX has been coming down. VIX is coming down because market is not doing anything. Investors are not buying any downside protection. That's why the VIX is starting to come head lower. So this is it's now fallen below. This is an area of support, but I'm not sure that it can hold. I could see VIX falling towards the 20 level, because I could see that market has a little bit more to the upside. So I can see VIX falling a little bit further. Even if it pulls back to 20, VIX is still high. Historically, if you look at the weekly chart, you can see that VIX historically has been near the 15 level right here. You can see. So there's still quite a ways for it to fall. You can see right here too. So historically it's still quite high. It's still above 20. So VIX looks like there's a little bit more to the downside. If we look at XLY versus XLP, this is value versus growth. So this is the ratio of XLY and XLP. You can see that growth stocks were underperforming, and you can see that growth stocks, this ratio has been declining, and it came down to this area, the previous low, and you can see there's a wick, big wick. So this is a positive candle. So we want to see that growth stocks starts to outperform the value stocks, and then so that this ratio can start to move higher. Especially during market bottoms, you tend to see growth leading value. You can see right here, the COVID lows. You can see that this ratio started to move higher, which means that growth was leading value. So at the moment we're not seeing that, but maybe this is a bottom. We'll see whether whether this is the ultimate bottom, and if there is a rebound, whether it can take out this level. But if it rebounds and then falls back, then that means that growth is still a problem. People are not moving into growth. So we'll keep an eye on this ratio, but this is an important level. If it goes below this level, that would mean that investors are still shying away from growth. Well, we'll leave it here for the time being. Thank you very much for watching the video.